Hello there. Welcome to Cost and Management Accounting N5. Today we want to look at a question from June 2021. This is a question on the preparation of production cost statements, and also you have to prepare the calculation of costs of goods sold during the year. Remember, cost of goods sold, we are concentrating on finished goods. Remember, we've got three different types of inventories that we are going to have there. We have got for material, inventory for finished goods, and then we've got inventory for work in process here. On calculation of cost of goods sold, we are going to concentrate on finished goods only. This is the question that we have on that question paper of June 2021. This question was on question 4, and it reads: the following information was submitted to you as the cost and management accountant of knives and forks CC. And then we are given there the details of the information that we have. We've got the column for details, and then column for the amount in terms of the value of the money, the rand. Then we are at the beginning, we are given opening inventories. And remember, these are in three different forms. We have got the material, finished goods, and then work in process. So remember, when we are now preparing the production cost statements, we are going to use inventory for material in the production cost statement, and also we are going to put work in the process, and then finished goods will go to the trading account, where we are going to use it on the calculation of cost of goods sold. Right. So beneath that, we are having transactions during 2019. We have information of the transaction that we are given beneath that, going down, and then beneath that table, the list of balances that we have. We also have additional information whereby we have one reading manufacturing overheads recovered during the year 2,220,000. So we are already given the manufacturing overheads that is recovered in the total amount of 2,220,000. Then on item 2, we have got closing inventories. So closing inventories also is also in three different forms. We have on material, finished goods, and work in process. So that's what we have there. And then we go down to the question now on the required part. You see that first part on 4.1, it's asking us to prepare a production cost statement for the year ended 31 December 2019. So very important to take note of where the year is ending is 31 December 2019. This will help you in terms of identifying these closing inventories. Remember, they might just give you by not specifically indicating that is closing, they will just say inventories at 31 December 2019. Then you know that this is the end of the year. So this is going to be our closing inventory. Then the one that you are given at the beginning, also you take note of the dates so that you can easily identify them as opening inventory. So that is the information that we have. The second part, we have to calculate the cost of goods sold during the year ended 31 December 2019. So on the calculation of cost of goods sold, remember, we are just going to use the format that we use in the trading account, whereby we are starting with opening inventory of finished goods. We had purchases, we less purchase returns if they are there, and also we subtract the closing inventory. But remember, this is a manufacturing business, so we are not going to have purchases. The purchases is going to be replaced there in the trading with the cost of production of finished goods, the figure that would have transferred from the production cost statement. So that's what we have in terms of this 4.1 and 4.2. So this is our, if you go to the other section, this is our production cost statement for knives and forks CC for the year ended 31 December 2019. So we are going to have two columns, and at the beginning of this production cost statement, we are going to have our opening stock or opening inventory. Remember, when we are in this production cost statement, we start by calculating the prime cost figure. And the prime cost figure, remember, we say direct materials, we add direct labor. The prime cost formula, remember, when we are calculating prime costs, we say it is equal to direct materials plus direct labor. So we are going to start on the section of direct materials. So on direct materials now, that's where we are going to say our opening stock of opening stock of material. Then we add any purchases of material that would have taken place during the year, and then we subtract any returns if they are there, and then if there are any carriages in terms of these purchases of material, we add here again. But in most questions we don't have those, and then we subtract the returns, and then we also subtract the closing stock of material. Then we get the figure for direct material. Remember, we'll be looking for the figure for direct material of materials that have been issued to production and they have been used. So material used now becomes a cost. So they will come here as direct material. Then we also add the direct labor that will be given in the question. Direct labor usually is a figure that comes as a straightforward figure. So that's what we are going to do there in the at the beginning of this production cost statement. So if you go up there, remember we said we are starting with opening inventory or opening stock of material. These are raw materials, remember. So here that's where we have got the information for material. So we've got 950,000 representing the opening inventory or opening stock. So this is the figure that we're going to start with in the production cost statement. So if you go to our answer section now, here we are going to start with our calculation of direct material. Remember, after finding the figure for direct material used, we now add direct labor to get the prime cost. So here direct material, then we list the calculation of the figure for direct material beneath that. So we're going to start with opening. We start with opening stock. We can say stock or inventory. We just mean the same thing here. So we go back to our question to check what figure do we have for that open inventory. It's here for material 950,000. So we are going to start with that one, 950,000. And we are going to put it in this column, which is 950,000. So remember, on the formula we said we are going to add purchases here, and this purchases is the purchases of material. Add purchases. So we go back to the question again to check where we can find that figure for purchases. We can go down to check which figure do we have for purchases. Let's try to find out. Right, if you come here, we've got the material received from suppliers here. So these are our purchases. These are representing our purchases. And the figure is 1,620,000. Remember, suppliers are the ones that we are buying from. And when we are buying, we are purchasing. So this figure represents our purchases, which is 1,620,000. So we are going to put that one as our purchases. So we go back to our answer section. Here we have got 1,620,000. Right, when we add our purchases, we are going to find the figure for material available for use. So the figure that we are going to find here, if we add these two, is going to be material available for use. Material available for use. So if we add 950,000 plus 1,620,000, we are going to get 2,570,000. So here you can underline to show that you are adding there. So there we also check if you've got some returns of these purchases. So if you try to find out here, you find that we have got the materials are returned to suppliers. These are worth 170,000. So we're going to subtract them. Remember, they are going to be retained, so they are not going to be used. Remember, on this section, we are calculating the material that have been used. And if they are being retained, it means they are not going to be used. So we are going to subtract them. We go back there and we just indicate that we are subtracting by less here, less returns. So if we subtract the returns, remember the returns are 170,000. And whenever we are saying less there in these statements, we are show in brackets to show that we are subtracting. So and also we are going to subtract the closing stock. Closing stock. So we go back again to check the closing stock of material. That is the one that we are concerned with at the moment. The closing stock of material, we've got here 620,000, so we are going to subtract them. Remember, we also have finished goods and work in process, but we are not concerned about them at this point. Finished goods are going to be included in the calculation of cost of goods sold, and then work in process, we are going to adjust them at the end of this production cost statement. So we are going to check this one, 620,000. We go back to our statement that we have closing stock 620. We have 620,000, and we are subtracting again there. And then after subtracting there, the figure that we are supposed to get there is the figure for materials used for the year now. This is the figure that we are trying to find by calculating there. We now find the figure for material used for the year. Material used for the year. So this figure, I'm not going to put it here. We are going to put it in this column. So what is going to happen there? Remember, we started on opening stock, and then we found the material available for use, and then we are going to subtract these returns and subtract closing stock. The answer that we get, we put it here, which is if you calculate there correctly, you're going to get 1,780,000. So here you get 1,780,000. That's the figure that we have there. And remember, we said the first thing that we do in this production cost statement is to find the figure for prime cost. And prime cost, we find it by saying direct material plus direct labor. So the material that we were calculating is the direct material. So now we go to direct labor. So here now we are supposed to have direct labor. Direct labor here, and then we go to the question to try to find out what figure do we have for direct labor. So we go up to the question and try to find out the figure for direct labor. Right. For direct labor, we are given this figure, which is written direct factor wages. So this is the direct labor that we have in the present, which is 1,300,000. So we go back there to put that one. We have 1,300,000. So now we have the material and the labor. So we can add the two to get the prime cost now. So if you add here, the figure that we are going to get there is going to be our prime cost. We add 1,780,000 plus 1,300,000. You are going to get 3,800,000. 3,800,000. So this figure is going to represent our prime cost. So that's what we have there in terms of a calculation of prime cost. Then beneath that now, we are going to have the manufacturing overheads recovered. The figure for manufacturing overheads recovered to come here. Manufacturing overheads recovered. So remember this figure we are given it in the question. You come here, check the actual figure that we are given for that one. You see that we are given it here on additional information item 1, manufacturing overheads covered during the year 2,220,000. So this is the figure that we are just going to put there. 2,220,000. So we're going to come here. We have 2,220,000. So that's what we have. So beneath that, we are going to list all the manufacturing overheads that we have. Remember, in this production cost statement, under manufacturing overheads, we are going to list all the fixed costs that we have in the manufacturing process. For example, we have rent, depreciation, rates, and rates there also come there is our fixed cost. So we list all the fixed costs that we have under manufacturing overheads. So this was the direct labor and direct material. They represent the variable costs that we have in the manufacturing process. So here, let's just list them there as manufacturing overheads, and we go and try to look for them in the list of balances that we are given there. So if you come here from the where we have got transaction for during 2019, that's where we can find them. We have got rent. Remember, this one is also a fixed cost. We have got 600,000 factory rent, so we can put that one. Factory rent. Here we have got factory rent, and the amount that we have there is 600,000. So we're going to put it in this column. Then the total will come here 600,000. Then we go and check another one that we have. Right, under factory rent, we also have we go down to check what else do we have. Beneath that, we've got salary for production manager. So this one is an indirect, and also it comes there is manufacturing overheads. So we're also going to put that one, salary production manager. So we come here, salary production manager. And the amount that we are given there, let's just verify the amount that we have there. It's 840,000. So we come back and put that figure. We have 840,000. Right. We go item by item as we go down to check all the overheads that we have. Overheads that we have. Right. Beneath that we have got salary for marketing manager. So remember, we are in the production cost statement, and in the production cost statement, we are calculating the costs that we had in the manufacturing process. And the marketing is not part of manufacturing. When we are marketing, you are selling the product, and this is going to be adjusted in the income statement. Remember, we have got operating expenses. So this one is going to come under the operating expenses section in the income statement. After the trading account, we get the gross profit. We go down, we add other income, and then we should subtract the also the operating expenses. So that's where this one will go under the selling and distribution expenses. So we are not going to put it here at this point. So we can just ignore this one, and then we go to the next one. We're given the net profits. We're not concerned about this one. Trade and other receivables. These are debtors. These are the customers that we are selling goods to on credit. So they are debtors. So we are not concerned about this. Materials returned to suppliers. We've already adjusted this one. Then we go to um, factory equipment at cost. This is a non-current asset or a fixed asset. So we are only concerned about the depreciation part of it, because that one, this one is a factory equipment. If the non-current asset is a non-current asset that is that is in the manufacturing process, this depreciation we are supposed to put it under in the production cost statement under manufacturing overheads. So this one is a factory equipment. So we are going to calculate the depreciation of this one. We have under beneath that we have got depreciation 20% per annum according to the cost price method. So we can calculate this one. So remember, when the calculation of depreciation, we have two different types, two different methods that we use on the calculation of depreciation. So we can come here and then we can just say calculation of depreciation. We have method that we have. One, we have got the cost method that we are given there. We can call it the straight line method, or we can call it the straight line method. And then also we have the what you call the reducing balance method or diminishing balance method. Reducing a balance method. So the method, the formulas that we use for these two different types two different methods are different. When we are on the cost method, we just say percentage that we are given, then we multiply the cost price of that non-current asset. Then on the reducing balance, we say percentage. Then we multiply it by the carrying value or the net book value. Where the carrying value we say is cost, find the carrying value first, we say cost minus accumulated depreciation for that non-current asset, and the accumulated depreciation of that non-current asset is the depreciation of that non-current asset from the day it was purchased up to date. So that's what we have. But in this case, we are told that is the cost method. So we are just going to say percentage times the cost that we are given in the question. So if you come here on the calculation of depreciation, we are going to say 20%, which is 0.2. Maybe we can just put it here. We're going to say 0.2. 20% as a decimal becomes 0.2. Then you multiply by the cost of that factory equipment, which is 3,320,000. So the answer that you get there becomes the depreciation for factory equipment. So if you multiply the two, you are going to get let's try to multiply to find the correct answer there. We get 664,000. So here you get 664,000. So this one becomes the depreciation on factory equipment. So this is the figure that we are going to put there in the question. So we are going to say depreciation and this is factory equipment. This is factory equipment, and it's 664,000. Right. So we also go to find out what else do we have. What else do we have in the question? So after depreciation, we've got material received from suppliers. These are the purchases that we have included. And lastly, we've got rates and taxes. So these ones also come as fixed costs. And remember, fixed costs, we said we put them under manufacturing overheads. So we've got rates and taxes. And the figure that we have there is 250,000. 250,000. So if you come here, you put that figure again. It's rates. We have rates and Texas. And the figure that we have is 250,000. We put it here. We put it there. Then we see on the next step, we are supposed to add there. So at this instance now, we can add starting from factory rent. So let's just check the figures that we have that we are supposed to add there. So we are starting there from our factory rent there. So here we add up to here. So 600,000 plus 840,000 plus 664,000 plus 250,000. And the total that we get there, we are supposed to put it here. When we found this total, we are supposed to compare it with the manufacturing overheads recovered 2,220,000. This one, we compare it with this one, and then we are going to see whether it's an under recovered or over recovered. So if you add these figures, there are 1, 2, 3, 4 figures that we have there. The total that you are supposed to get there is 2,354,000. So here we've got 2,354,000. So that's what we have there. There's our total. So this figure, we are going to call it the total actual manufacturing overheads. Total actual manufacturing overheads. Total actual manufacturing overheads. So this is the figure that we have, 2,354,000. So we compare it with this one, 2,220,000. And as we compare them, we see that this one is greater. We can see that this one is greater. And when this one, the total of the year is greater than this one, we call it an under recovery. So it means we have got an under recovery there. And when we have got an under recovery, we subtract it here to get this figure. So the idea is that this figure is greater than this one, but it's supposed to be reduced so that it is equal to 2,220,000. So by reducing it, we also find the difference between these two figures. We say 2,354,000 minus 2,220,000. When we find the difference, we put it here and we put it in brackets to subtract so that we find this figure. So if this figure was smaller than this one, it means we were supposed to add the difference here. We find the difference between the two, then we put the difference here, then we show it as a positive figure here. We add it to this one to get this one. But this instance is the reverse. We have got a greater actual manufacturing overheads. So we are going to subtract. So by saying now 2,354,000 minus 2,220,000, I was supposed to get 134,000. So here we have got 134,000. And so we subtract it from this figure to get this figure. So here now we say it's under recovered. It's under recovered. So that's what we have there. What we are going to do next is we are having prime cost there. We can just maybe try to move the page so that we actually see what is there. We have what prime costs are being 3,800,000 there. We add it to the manufacturing overheads recovered. Yeah, we add these two figures. So the figure that total that we're going to get, we put it down there, and we are going to call that total as total production cost. Total production costs. So here we are going to have our total production cost. So here we have our total production cost. We have our total production costs there. total production. So if you add those two figures, the total that you get here is 6,020,000. So that's what we have there. And then we are supposed to, beneath that, we are supposed to add opening work in progress. So our opening work in progress, we can get it in the question. We go up there to try to find out what we have in terms of opening inventory and opening work in process, which is this one, 370,000. So we are going to add that one. And then we subtract the closing work in process, and we can just confirm the figure for closing work in process is this one, 170,000. We are going to subtract it after adding the opening. So we come here, opening work in process. Remember the figure that we got there is 370,000. So we have here 370,000. So we add it to this one, and the total that we are supposed to get there is 6,390,000. 6,390,000 is the total that we get there. So after adding there, the total that we get is 6,390,000. Then we are supposed to list the closing work in process. And remember, we checked it and it was 170,000. So here we've got 170,000 that we have there. And we are saying less. So here it means we are subtracting. Then we subtract, and then the final figure that we are going to get there is cost of production of finished goods. So here now we have cost of production. Cost of production of finished goods. So this is the figure that we are trying to find in the production cost statement. And this figure, we are supposed to say 6,390,000. We subtract 170,000 and you get 6,220,000. So this is the final figure that we have, this one. So this is the figure that we are trying to find in the production cost statement. So remember, this question has got two parts, so we can go back there and check the second part of that question. So the second part is here, is saying calculate the cost of goods sold during the year ended 31 December 2019. And remember, we said when calculation of cost of goods sold, we are going to use the format in the trading account. So this is the calculation of cost of goods sold format that we are going to use. And remember, we are just going to do what we do in the trading account, whereby we start with opening inventory or opening stock of finished goods. So here we are now interested in the stock of finished goods only. And then we add the cost of production of finished goods. Remember, if it's a manufacturing business, we don't have purchases. We have the purchase figures replaced by the cost of production of finished goods. So this is the one that we add to the opening stock. So here we start with opening. Opening stock. And the stock that we have is for finished goods. So we can go back there in the question to check that figure. We have it at the beginning of the question. So here we have finished goods. We have 470,000. So we come here. 470,000 there. And then after that, we add costs. We add cost of production. cost of production of finished goods. So this is the format again that we used in the manufacturing when we are calculating the direct materials that were used. But in the production cost, we production cost statement here we added purchases, but here we are saying we replace purchases with the final figure that we got in the production cost statement, which is cost of production of finished good. So remember this figure, we found it there. You can go back to recheck the actual figure that we have is this one. This is the figure that we are taking 6,220,000. So we go back there on the calculation part. Here we have got 6,220,000. Right. So and also we are supposed to add the under recovery. The under recovery also will come here. So if it was an over recovery, we are supposed to subtract it here. We are supposed to subtract it here. So if you go back to the manufacturing, we can just maybe verify there in the manufacturing that we prepared. You see that this figure is the one which you see that this figure is the one that was representing total actual manufacturing overheads. This is the figure that was representing the total manufacturing overheads. And then here we had the under recovery. So the under recovery is this one, which is 134,000. So this is the one that we are going to transfer again in the calculation of cost of goods sold there. So we can take that figure. So on under recovery there, remember it's 134,000. So if it's an under recovery, we are supposed to add it here, 134,000. We have 134,000. But if it was an over recovery, we are supposed to subtract it here. So after that, now we are going to find the figure for finished goods available for use. Finished goods available. This is finished goods available. This is the figure that we are going to get there. So if we say 470,000 plus 6,220,000 plus 134,000, the answer that we are supposed to get there is 6,824,000. 6,824,000. Then after finding that figure, you then subtract the closing stock. So here you can say less closing stock, and this closing stock is for specifically for finished goods. So you can go back again to check in the question what figure do we have for finished goods as closing stock. Remember, the word stock can be replaced by inventory. They mean the same thing. So here on the closing stock part, we have got 270,000 here as our closing inventory or closing stock, 270,000. Then we go back to the question. We have 270,000 there. And remember, we are saying less. So here we subtract, show by brackets. Then now, when we subtract this one, that's when now we are going to find the figure that we are looking for, which is the cost of goods sold. So here we now have the cost of goods sold. So we say 6,824,000. We subtract 270,000. We get 6,554,000. So this now marks the end of the calculation of cost of goods sold. This is the figure that we were looking for. So this marks the end of this question 4 from June 2021. So thank you for listening. Those who haven't subscribed, please subscribe and share. We'll meet again in the next video as we prepare for the final exam for this year. Let's stay tuned for more videos that are going to come with that. We meet again. I'm signing out.